and let's welcome on board Anshu Singhal, who is the Managing Director of Mahanagar Gas, joining us on the show right now. Hi, very good morning and thank you so much for your time. Firstly, when I see your volume numbers, then your industrial and the commercial volumes, they have seen a growth of 14 to 15% on a YY basis in the quarter gone by, what was the major driver of your volume growth this time around? Help us understand this, and along with that, is this growth rate sustainable going ahead in FY26?
Yeah, overall, the volume growth has been around 12%, and you rightly mentioned industrial and commercial volume have grown around 15% year on year. The main reason was that we could get some new connectivities, last mile connectivities in our Raigad and Thane areas, as well as we have reviewed our term and contract terms and conditions and offered prices and the terms which are more favorable to the customer as per their liking. So some of these measures have resulted into volume growth, and we expect this financial year also overall volume growth will be in double digit at least.
I want to talk about, Mr. Singhal, your APM gas allocation. That's come down to, over the last 3 to 4 months. Consequently, how much is procurement cost expected to inch up higher by?
The APM gas for domestic PNG is 100% available. That has not been cut down. For industrial and commercial also, we are getting, we never get domestic gas, so it was always on the imported LNG. Coming to CNG, we were getting around 51% and now it has come down to 36%. So the procurement cost has gone up around maybe 3 rupees per kg. And we have also increased the prices 1.5 to 2 rupees per kg in last 2 months or so. So part of it we have absorbed and part of it we have passed on to the customer. So as of now, the Indian crude basket is also coming down. So we expect the procurement cost to stabilize over a few months now.
I remember we had a conversation where you indicated that you are looking at moving into the battery or the power storage business. And that was a conversation I think we had 2 quarters ago.
Yeah, that's right. We have already formed a joint venture company with an international battery company in which we are putting up a battery cell manufacturing facility in Bangalore, which will be first of its kind because right now almost everything is getting imported from China and Korea. All the battery cells in India are getting imported and they are packed into the battery packs. So initially we will be putting up a plant of 500 megawatt in 2 plants, that means 1 gigawatt plant, with an investment of around 875 crore. So 40% equity is with us and 60% is with international battery company. So this plant should be up and running in next 12 to 14 months or so.
Okay. But in general, the concerns with the stock market participants have about availability of gas. I'm changing topics here, pardon me, because I just remembered something. How human mind thinks, you just remember something, you ask a question. So back to what your main business is, gas. And back to the basic concern, gas availability after APM. Can you assure the markets that, look, there is enough and more gas availability?
See, the gas availability is not an issue. It's at what cost we are going to get the gas. Currently also, the APM gas, whatever reductions are happening, is getting compensated by new well gas. So which is at a higher cost. The APM gas we are getting at with a ceiling of $6.75 per MMBTU. Whereas the new well gas, we are getting at 12% to Indian crude basket, which is around, at the current prices, maybe around $8.5 per MMBTU. So it is a matter of cost at which we are going to get the gas. Further, even if the domestic gas is down, we can import LNG, which we are doing for industrial and commercial and partly for the CNG segment. So availability per se is not the problem. The cost of procurement is an issue, which will be critical for the companies, especially the new CGD entities who will be operating at very thin margins.
What we understand is that because of this higher procurement cost, the company has been taking price hikes and trying to pass it on to the customers. Help us understand how much of it has already been passed and going ahead. What are your plans to take some more of the price hikes?
It is a very dynamic situation that what is the procurement cost, what is petrol, diesel cost, how much margins we are making and how much volume growth we want to make sure. So all these things come into factor. We have increased the prices in last 2 months or so, primarily because the procurement cost has gone up. So we have also absorbed the prices to some extent because as you see in our margins, they have come down as compared to the last year. Last year, we were operating at EBITDA per SCM of around 13 rupees. Now it is 10 rupees. In fact, last quarter, Q3, we have 8.5 rupees, and now this quarter, we have 10 rupees. So on an average, we have passed on some price rise through the price rise of CNG, and some of it we have absorbed. So this is going to be the new normal, depending on what is the cost of APM gas as well as the new well gas and the HPHT gas domestic side. We will be taking a call on whether to increase or decrease the prices.
The other thing, of course, is also your guidance, because you guided for an EBITDA per SCM at about 9 to 11 for FY26 versus 10.2 for FY25. If prices were to be hiked further, could they support margins?
I think 9 to 11 is a very healthy margin and a very wide margin. Currently, we are operating at 10.2 rupees this financial year. So maybe we can come down. Maybe 9.5 rupees will also be a good margin. So we will be operating something 9 to 10, 10.5 rupees will be the new normal or guidance for this financial year at least.
Apart from the basic business, which you're talking about almost like a double-digit growth there, which is in and around India's nominal GDP, how would next 3 years be different from last 3 years? Last 3 years were steady, but they were dependent on gas availability. How will next 3 years be different? Will it be expansion? Will it be higher growth?
I think the growth will be higher because last financial year we have grown by 5.5%. Now this financial year as compared to the last one, we have grown by 12%. So going next 3 years, we expect at least double-digit numbers, primarily because CNG infrastructure is increasing. We ourselves are increasing quite a lot of CNG infrastructure. More and more vehicle manufacturers are making CNG vehicles. There is also a push for CNG and electric vehicles in cities like Mumbai and Delhi, where in Mumbai, again, Bombay High Court has formed a committee to have a look at more bakeries and other industries to shift to cleaner fuel like PNG and to phase out petrol and diesel vehicles in a phased manner, substituted by electric vehicles and CNG models wherever they can be done. So all these things, our signs are good. Plus industrial and commercial volumes have been healthy, as has been evident from this particular year. And we expect that another 2-3 years will be good for the company to at least hinge on double-digit numbers. Plus Unison is getting merged to Mahanagar Gas within few months. So that again has registered more than 30-40% growth year on year, because the volumes are low, but the number of year-on-year growth is high. So all these factors put together, we expect a good growth number next 3 years.
Right, Mr. Singhal, so good to have you today on the show. Thanks for your time and answering all of our questions.
Thank you.
If you like this video, then like, share and subscribe to ET Now.